The world is being rebuilt by artificial intelligence, but who is providing the blueprint, the tools, and the foundation for this revolution? While many companies are talking about AI, one tech giant is embedding it into the very core of global business. This is the story of Microsoft's transformation into an AI-native powerhouse. And according to a recent AlphaPilot valuation report, the market still hasn't grasped the full scale of this opportunity. Their recommendation? A strong overweight with a price target of $523 a share. Let's break down why. To understand Microsoft's true value, you can't look at it as one single company. You have to break it down into its core empires. First, the engine, the intelligent cloud. This is Azure. Valued at a staggering $2 trillion, it's the foundational layer providing the raw computing power for the AI revolution. It's the second largest cloud provider in the world and closing the gap fast. Second, the cash machine, productivity and business processes. This is the Microsoft you use every day, Office 365, Teams, and LinkedIn. Valued at $1.2 trillion, this division is a fortress of recurring revenue. Now it's being supercharged with its new AI assistant, Copilot. And finally, you have more personal computing. This includes the ever-reliable Windows, Search, and the massive gaming division with Xbox and Activision. Combined, these are valued at over $365 billion. When you add it all up, the core business value is immense, but the real story is how AI acts as the glue, making the whole greater than the sum of its parts. This is where the genius of Microsoft's strategy becomes clear. They built what we can call an AI Flywheel, a self-reinforcing cycle for dominating the enterprise AI space. It starts with infrastructure. Azure provides the essential power and access to the cutting-edge GPUs needed to train and run complex AI models. A recent multi-billion-dollar deal with Nebius for flexible capacity shows they are smartly managing costs while ensuring they can meet explosive demand. Next, it becomes a platform. And this is key. Microsoft is positioning itself as the Switzerland of AI. By recently integrating Anthropic's Claude 3 models alongside OpenAI's, they are signaling to businesses, we are not locked in to one provider. We offer you choice. This de-risks their strategy and makes Azure the most attractive platform for enterprise customers. And the final, most important step, application. This is where the money is made. Microsoft isn't just selling access to AI, it's embedding AI directly into the workflow of hundreds of millions of knowledge workers through Copilot for Microsoft 365. This creates a direct, scalable, and high-margin path to monetization that no competitor can easily replicate. More usage on Copilot drives more demand for Azure's infrastructure, and the flywheel spins faster. This integrated strategy creates a nearly unbreakable competitive advantage, a deep moat around their business. For a company to leave Microsoft's ecosystem, they wouldn't just be switching a cloud provider or an email service. They'd have to rip out their entire digital backbone. The switching costs are massive. And while Microsoft is investing record amounts in building out this AI future, they are demonstrating incredible financial discipline. They maintain a fortress-like balance sheet and are committed to shareholder returns, proven by a recent 10% dividend increase. This tells investors two things. Management is confident in long-term cash flow, and they are focused on rewarding their owners. Of course, there are risks. Regulatory scrutiny is always a factor for a company this size, and competition is fierce. However, Microsoft's deep experience in navigating these challenges and its integrated value proposition give it a defensive strength that is hard to bet against. So, how do we get to the $523 price target? The quantitative analysis, adding up all the business segments, gives us a baseline value of about $484 per share. But that number doesn't tell the whole story. The report adds an 8% qualitative premium. This premium accounts for the brilliant strategic moves that reduce risk and accelerate growth, like the multi-model AI approach and flexible infrastructure deals. These actions make it more likely for Microsoft to not just meet, but exceed future growth expectations. That strategic premium brings the final 12-month price target to $523. The conclusion is clear. Microsoft is a core holding for any investor looking to capitalize on the long-term trends of cloud computing and artificial intelligence, backed by the financial stability of a blue-chip leader. While its current price is close to this target, any market-driven pullback should be seen as a prime opportunity to invest in a company that is not just participating in the AI revolution, it is architecting it.